Planning to apply for a loan soon? Yeah. Before you hit that apply button, your credit score matters more than you think. In this video, I'll show you how to raise your credit score before applying for a loan so you can qualify for better approval odds and lower interest rates. First, review your credit report carefully. Look for errors like incorrect late payments, wrong balances, or accounts that don't belong to you. Even small mistakes can lower your score. If you find errors, dispute them immediately. Fixing inaccuracies can sometimes increase your score within weeks. Next, reduce your credit card balances. Your credit utilization ratio, that's how much credit you're using compared to your total limit, plays a huge role in your score. Try to keep it below 30% or even lower if possible. Payment history is the biggest factor in your credit score. Make absolutely sure every bill is paid on time. Credit cards, EMEs, utilities, everything. Even one late payment before applying for a loan can hurt your approval chances. Before applying for a loan, avoid opening new credit cards or applying for other loans. Each hard inquiry can slightly lower your score. Keep your credit activity stable until after your loan application is approved. Don't close old credit cards before applying. Keeping older accounts open helps maintain your credit history length and total available credit, which supports your score. If possible, wait at least 1 to 2 billing cycles after lowering balances. That gives lenders time to report updated information to credit bureaus, which can reflect a higher score when you apply. So, before applying for a loan, check your report, lower your balances, pay everything on time, avoid new inquiries, and keep old accounts open. A little preparation can mean better rates and higher approval chances. If this helped, hit like and check out more credit tips. Planning to apply